Good morning, all. CamelbackTrading.org coming to you this Tuesday morning, March 14th. We're looking at Window Trader's market profile of the ES and SPY. So CPI coming out in a little while. So a couple of things let's talk about real quickly. First and foremost, nothing changes unless the bulls are able to take out yesterday's high and put the daily back into balance. Okay, right now we're down on the daily. We're down on the weekly, with an outside week down, and the monthly is balanced. So if we don't take out a daily high, the downward pressure continues on the weekly and the daily, and the monthly continues to descend towards the bottom of their balance, their 5-month balance. So very important for the bulls to try to rectify that as quickly as possible. Second, yesterday's second highest volume of the year, really good range again. Look, the lifeline of a day trader is volatility, range, and volume. So we've gotten that the last bunch of days. Hopefully it keeps up. You have to make do when the volatility is high and the ranges and volume are good, right? Doesn't last forever. So these are the days you try to make your bank, and on the other days try to chip away. As far as the game plan for this morning, well, again, a lot's going to determine at 8:30 when it comes out. Again, I think CPI might not even be the big factor anymore because of what's going on with the banks. So we'll see next Wednesday, a week from tomorrow, what the Fed decides on that. So the game plan this morning, if we are to take out yesterday's high, then we have to deal with Friday's high and Thursday's trend day. A lot of single prints in there. Okay, now it's going to be different with my reference points on ES because I'm not going to back adjust. But it doesn't mean I'm going to ignore. If we open higher, we're going to be taking back those single prints even prior to we get here. But that's why I think SPY is a big reason why I look at it. But same here. I'm going to see where those single prints would have gotten filled on the June contract. So it's not going to be that easy to take back this whole trend day, I don't believe, if we are to rally, but we'll see how they act. First and foremost, we got to take out yesterday's high, then Friday's high, okay? And then we'll see how big the balance forms. So if we're to open inside of yesterday's range, all we have is our 9 and 10 wide point of control. That's it, okay? And the day's high and low. So after the CPI comes out, if at 9:30 we open up inside of here, expect major chop. If, however, we gap higher, then it becomes, again, a case of does the gap hold? Gaps have not held all year, basically. So it also depends on the size of the gap. If it's a small gap, odds are we're going to fill it. If it's a larger gap, it might hold, but it also might stall anywhere near these single prints up at this level, okay? So especially if we get to around the 4,000 level. So that's something to keep in mind. On the flip side, if we gap lower, well, sellers will probably get even more aggressive than they've been and really start pushing this lower, especially for the monthly to start heading towards the bottom of that 5-month balance. All things to keep in mind. Inside of here, really no play. We have a wide POC, so if you open inside, odds are you'll trade at it. If we gap higher or lower, but then fail, odds are you'll come back to our 9 wide point of control and overnight wide POC. Again, in the trading room, there's no guessing. We're going over this prior to it happening as it's evolving. And then on the chart, so the daily, outside day down 2 days ago, we're down. If we gap lower or take out yesterday's low, eventually this will be a target, at least for now, which is around the 375 level. So that's about $10 from where we settled if we were to start going to the downside. On the flip side, if we're able to take out yesterday's high, then we're going to be, next level would be the 200-day moving average in SPY and starting to take back some of the trend day from Thursday. But first, Friday's high is literally where the 200-day moving average closed yesterday. So if we do take out yesterday's high to come back into balance, first things first is to try to get above Friday's high and the 200. The 20 right now looks like it's about to curl below the 50. Again, that was a non-factor last time it happened. Good luck trading today. Have a good day, and we'll recap at 4 p.m.